Good day. This is Peter Conniff from Castlestone Management with comments on the technology sector and its performance year to date. I think it's important to take a look back at the first quarter to see where we are in tech today. First quarter was off to a strong start until the coronavirus closed many offices and sent many people into lockdown. Stocks experienced one of their worst quarters on record. The technology sector, however, managed to put in a good first quarter, being the leading sector in the S&P 500. Microsoft was the only Dow Jones Industrial Average stock to put in a positive first quarter 2020. Things began to change in mid-March. If you remember, the Federal Reserve announced a surprise interest rate cut on Sunday, March 15th, taking rates down to near zero. On Tuesday, stocks experienced one of their worst one-day sell-offs since the October 1987 sell-off. This give-up trade or washout trade put in a bottom in stocks. It drove the S&P 500 below 2,400 and the Nasdaq below 7,000. This floor forced many sellers out of the way, and stocks began to rebound, led by technology. What's driving technology? It's the change in habits. We've changed our habits to stay at home, work from home. Through April 22nd, the tech sector has been the top performing sector, with systems software, in other words, Microsoft, and home entertainment, in other words, Netflix, being the top two performing tech sectors year to date. As people watch more Netflix, shop on Amazon, use Microsoft for meetings, these companies become the leading stock market companies. The top performing tech names year to date through April 21st is Tesla, up 64%, Netflix up 34%, and Amazon up 26%. Let's just take a look at one of those companies, Amazon. It's benefited from the outbreak as the demand has surged for online and at-home shopping. Earlier this week, the company announced it would hire 100,000 additional employees to meet the demand. The company reports earnings tomorrow. When they last reported, which was in January, profits had continued to accelerate. North American sales grew at a 22% pace to $54 billion. Prime membership had reached 150 million globally. Other companies like Apple will soon release its iPad. Netflix has all of their content, all of their shows filmed through the end of the year. So unlike other media companies struggling to get content, Netflix has it through the rest of the year as more and more of us get online. And obviously we mentioned Microsoft already, talking about Office and people working from home. Where do we go from here? The New York Stock Exchange FANG index is up for the year. However, the S&P and the Nasdaq both remain below zero or negative return for the year. The S&P 500 and the Nasdaq are approximately 10 to 15% off their February highs. I would expect them to gradually make up that ground. The road to recovery will not be a smooth one. There will be pullbacks along the way, but I believe the bottom has been put in the averages. And as we slowly come out of the coronavirus, we will continue to see improvement. I would expect the tech names, the ones we've mentioned, to be the leaders. Thank you for doing business with Castlestone. We appreciate your time today. Stay safe.